Fred Atwater here. This is a classic Robert Palmer song. And it's Bad Case of Loving You by Robert Palmer. Come back to that here in a minute. Sometimes when I have a moment in my head, I think of these songs to add. And the song starts with, "It's a hot summer night," right? It felt like a net, is what he says. And he's going to... It's a song about romance and give me, doctor, give me the news. But it's kind of cornily, in a corny manner, applicable to what I'm thinking about the SP 500 right at the moment. All right. First, a book recommendation here. Ken Fisher, Beat the Crowd. I received this from Amazon a day or two ago. It's on my on deck for me to read. I'll finish it next week. If you have the chance, let's read it together. Send me a note, whatever you want to do about it. Let's do a sort of a active book club. I'm a very avid, prolific reader, and stuff makes you smarter, man. You got to read it, you got to understand it, and get through it, move on, get to the next subject. Makes you a better reader, a writer, makes you a better listener, a better talker, a better speaker, more confident in the things that you hear that are going on in the world, and you can make your own sort of judgment call based on that, whether you want to believe somebody or not. It's up to you. All right, so there's Beat the Crowd by Ken Fisher. By the way, Ken Fisher is a billionaire manager of funds. I'm going to read what he says, all right? This game is not hard. You just do stuff like the people that have a lot of money do it, all right? That being said, so I saw this article on CNBC this morning. There's it was right on the head page there. An indicator of perfect track record just sent a powerful sell signal. Ooh, scary, right? So somebody here, Merrill Lynch's bull and bear indicator, sell sign, whatever. But when I scrolled down and I was reading, glancing through this, and I was like, I wonder what their sell target is here. And look at that. Or sorry, their sell target, they're kind of saying, you should probably think about coming off the market right now. But here's where their S&P declination point was, to 2,686. And so last weekend, I was actually about 2 weeks ago, 2 weeks ago, let's call it 2 weeks ago, I did this with my chart on the S&P, and I put a 269 right here. That's because I'm on the SPY chart, but if I go to the SP 500 index, which is what they're talking about, that's right about the same level. They're talking about 2,686. All you got to do is multiply 269 times 10, and you get 2,690. They said 2,686. Tells you, hey, we're pretty close in terms of where this thing should be. Let me show you why I think the market is, in that hot summer night. Market's hot. If you go long right now, you might make some money. All right. I'm not saying that you won't, but what I'm saying is the market is overheated, hot, and here's why. Check this out. RSI, relative strength indicator. It's kind of an old-fashioned sort of a thing. My settings on the RSI are set to, our default settings. So this line right here, over here, this 70 hack is generally considered the threshold for an overbought market. And if you go on the other side to a minus 70, it's generally considered by that particular technical indicator an underbought market. So you see right now, we're kind of up here. In the hot summer night, market's hot, man. That's why this line is red. That thing is cooking, man. Usually 70. Look at how it bounces up here. It bounces around 70. Bounces around 70. It's kind of hanging out, meshing in between the averages right here, and then boom. It's in the last several weeks. It is spiked, and it is hot right now at 90. When I say hot, it's hot overbought. All right. That's a old-fashioned sort of an indicator, but there it is right there. Me personally, I'm going to sell the remainder of my S&P 500 holdings today. I thought that I had exited last week, but I had only exited half. But today I gotta let them go, man. I cannot ignore the indicator in front of me. This mark right here is at 269, so that's where I'm saying, based on these candles, this is a weekly chart, by the way, that I think that thing is going to pull back to at some point. Again, if you go long now, you might make some money. I don't know. I can't tell you what's going to happen. I'm only telling you what I'm going to do. I'm going to pull the rest of my money off of the S&P 500 at the moment. It's also known as the Vanguard 500. It's also known as the Principal 500, or the, name your brokerage 500. It's the S&P. It's all the same stuff. You can check it on a chart with the symbol SPY. This is the weekly chart here, and when I pulled this up, we're traded up to 284.93. I think that's today's trading range on there. Let me show you as well these bands right here, the squiggly purple line, and this red line right here. Notice how the chart, how the stock. That didn't do it. Let me pull that down, and notice if I highlight that, the stock has traded up and bumped up against the upper Bollinger Band. That isn't a fancy term. That is not a fancy term. That Bollinger Band is set at 2 standard deviations high. This one is set at 2 standard deviations low. All right. Is that fancy? No, you guys remember, like, I'm talking like 10th grade here. If I were to draw a bell curve, all right, this being the mean, this being 1 standard deviation, this being 2 standard deviations on either side of that bell curve, man, we're up here. We are hot, and we're outside of 2 standard deviations this week. The nature of the bell curve is that it returns to the mean, so it returns itself to this zone right here, where everybody's happy. That's kind of an ugly happy face, but that's what that is interpreted as. You're outside that 2 standard deviations of the bell curve. That's, I just can't ignore that sell signal. Let's look. It's not a sell signal. It's a overbought signal. A sell signal would be where the candlesticks actually propagate themselves, and you can see and tell when it's appropriate to sell. Let me go to the daily real quick here on the S&P 500. All right, this one doesn't show us it shows us way overbought down here. Down on this indicator here, it still shows us within that 2 standard deviations. And here's a kind of a Fred Kentucky windage sort of a thing. If you look at the slope of this line from way back here in whenever this was I can't even read the numbers. That's in the beginning of 2017, Feb 2017. So we were here, and let's just draw a straight line to this breakout point right here, boom, which happened in January. Or yeah, that's we're looking around the January timeframe. That slope of that line is a very normalized appreciational market. Now, what happened here? We got some very bullish behavior starting in January, and the slope of the line increased. Boom. So that becomes into that parabolic increase of the market. I'm kind of reading the waves here and seeing what this is. This is all due, in my opinion, only to about 1 million traders, or not even traders, 1 million investors with their mutual funds and their this and their that they're flowing money into the market. But the big money is going to take this thing down, and boom, off of there. That is generally where I see re-entry into the market, okay? And that's at around the 270 price, or you can call that the Mark 269, or B of A called that the 2686 on the index itself, so that would be 2690-ish or so on the particular thing. But guys, I cannot ignore that signal. So I placed an order to sell at close today the remainder of my S&P holdings. It'll make a very nice profit. I mean, the profit, even especially from these just the month of January. I mean, geez, look at that. That's 1 month. I mean, the S&P went from 270, or SPY went from 270 up to 284.7. It's trading at right now. I mean, whew, that's cool. I mean, I'm glad I was long. But I got to take off. I got to protect. Okay, that's how you get wealthy, guys. It's not by just buying and hoping. It's by kind of watching these things, putting some money at it. If it goes the wrong way, you get out. If it's going the right way, let it ride. And In this case, my pain meter has capped. I can't take it anymore. I'm going to pull out. Maybe the market breaks through. I don't know. I don't have, look at these eyes. They're normal human eyes. They're not embedded with x-ray vision as to what the market's going to do. I just know what the statistics of the exercise say. All right. That's my analysis of the S&P 500, guys. Doing very well. The market news is hot, and protect yourself. If you can take off half profits. You can do a number of different ways, but or you can let it ride. If you're a very, very long-term investor, 30 years, you're not even going to touch it. Let it go. I mean, this is not a doom and gloom. The market's going to crash. No, the market's hot and it's overdue on the RSI for a pullback to that range. And I found it quite interesting that the guys, the big time, whatever you call them, professionals at Merrill Lynch or Bank of America, Merrill Lynch, kind of tied together, but said the same thing. Wow, imagine that. All right, thanks, guys. Good luck. Yeah.
Doctor, give me the news. I got